So we might be seeing I want to go to the daily candle. In our interpretation of candles and what price is going to do, it's very important that we know what price action is telling us. First, this is the daily candle. Let me first go to the weekly candle and see the nature of the weekly candle that we have. Now, seeing this closing like this would mean that there's an impulse here and the candle fully formed. Then the next candle went up and the third candle probably is going to close like this. So with this, I can tell you for free that the price action on the weekly time frame still tells me we're going to see more upside. We're going to see more upside. And this upside most likely is going to burn off sideways, most likely. But for now, let's not look at the daily candle, the price action on daily candle. So looking at it on the daily candle, this is the first move here. And this second move suggests more upside, but not that quite strong. They did a sideways move here and they gave us this for more upside. So we are going to be seeing correction like that. So when you see this, it is not particularly telling us that they are going to change direction. So this move now, you can see that they came back down here, they forced the price back up, and this is not a nonsense price action. So they might stay in here correcting and they're going to consolidate for more upside. That is what I can see here. So consolidation from more upside on the daily is consolidation from more upside that I'm seeing now on the USD JPY. So with this, is not yet a strong price action for me. If you look here, if you look at this price action here, with this move and this move, for me, if you see this as a move to the downside, we're going to see a B. Sorry, yes, because the correction A, B, and a C, and after a C, we're going to move forward. If we are going to have a correction here or a change of direction, it's going to be sharper than sharper here. It's going to thrust more downward, and though this also had gone up correctively, so this one that had gone up correctively here does not suggest that probably they might break the top, but they're still coming down because they're going to correct C leg. So this is a B, and a C, and after that C, they're going to move further up. So they're not ready to bow down yet. They're not ready to do that on the 4-hourly time frame. They're not ready to do that. That is what I can see here. So we are going to be patient. So the best we can do is to look at where to begin to guide price. So we can't, so this is where you can guide price with this. This is where you can guide price. Look at this move here to guide your price. So if you want to guide price, this might be the last, one of the few last leg that you're going to have. So we can only do this to guide price. We can do this to guide price, to catch if they're going to fall early. Is one of the things we need to do to catch, and we continue to adjust this as we see more structure. So so that's on the daily time frame. So let's look at the way it now looks on the 4-hour, what we have done. So this is the way it has looked on the, so I can now more or less fine tune it on the 4-hour days. this on the 4 hour, I will need, once price gets here, I want to see the nature of the price action, the 4 hour price action, to know if we are now moving down or not. Apart from the fib, you are going to first look at your fib level as more be important, because this is 61. Price had gone beyond 61. So all they can do here is to correct and move further up. You don't just take these levels isolatedly and say, oh, they are ready to. I'll be more interested in what happens above it, not at that level, except that they throw a big candle down here. So if they throw it down, I will still expect them to correct up, and I will follow and join them to sell from up. If they, move further down here to this level, then I will now I will be interested. I need to see an impulse to the downside before I can say. So if I didn't join them and it's an impulse, then I will wait for the correction to enter and sell. Except I'm able to pick price action at the level that I expect the price to engage, which is so. I hope you can see me. So I will expect to see price action around this area. This area. This is where I expect price action about 300 pips more. It could be truncated around this area. So this area where you see this crest and this crest, most importantly for me, this crest. So if it goes and pairs it, it's still okay. But once it does not break here, above here, I'm good to sell. I'm a seller. So that's what I can do. That's how to anticipate. And of course, apart from that, I need to see price action. But at this level that I want to buy here or sell from here is dangerous. I need something to convince me that they want to sell from here. So I can't see that. From what I can see, I can't see that they're going to sell because they are broken here. This is 61. You can see the resistance as 61. They are broken that resistance with a full body candle. So you can see they are broken it. So I need to see what is going to happen. So price is not returning here. So it's going to go higher up. That is what I can see. This is on the weekly time frame. The next one I want to look at, because I can't possibly do everything, is can somebody just suggest another yen pairs that you want me to see, you want us to see before we look at AUD USD? And that will be the last one we'll do for today. So somebody just suggest another yen pair that you want me to see before we go to
GBP JPY.
Which one?
GBP JPY.
That is pound yen, right? So let's look at pound yen.
Yes.
Let's look at pound yen. All what I'm doing is analysis. You can see it's a clean sheet, and I'm doing it.
Have we done CAD yen?
We have not.
Okay, all right.
Which one should I do, CAD yen or JPP JPY? Which one? Should I do CAD yen or pound yen?
Both.
I should do both.
Yes,
okay.
Now.
Let me start. Let me start with CAD yen.
Okay.
Let me start with CAD yen because some of us did CAD yen and it wasted our money. Okay, don't let me go to what I'd analyzed on. Let me go to a fresh page. Okay, CAD yen. This is CAD yen. How do I clean off now? That's CAD yen. Now, the same way, let's go to monthly time frame. Monthly time frame will allow us to understand what is happening here. Monthly time frame will help us understand what is happening here. Now, this is a wicked pair. This is a wicked pair which we want to understand. This is a wicked pair. Now, forget this move. Something had happened before this move, forget it. But what we're interested is this sharp move to the downside. This sharp move to the downside is what we're interested in. And just mere looking at this sharp move, for me, it is what? It is a 5-wave structure to the downside, very sharp. And let me allow you to see it. Let me allow you to see it. Fine now. From that place, from that place to this place, that's the move. So that's the move. So that's the move from here to here. That's the move. Now, so what we are now seeing is now is correction of the move on the higher time frame. This is, remember, this is the monthly time frame. So when you don't, you have to understand this move for you to understand what is happening here. So now, after that move, we now have a correction, which is A, B, and a C. So that's what we have there. So this is A, B, and a C of this move. We now have another thrust down. So compare this with this. This is another 5-wave structure. So this is now what we are correcting. So we are done correcting this as A, B, and C. Okay, so let's now pay attention to this new move. Let's now pay attention to this new move. So which means that we don't need anything here per se. Let me change the color. We just needed it to understand what happened. To understand what happened. So, like we say, this is wave 1, and between here and here, and is wave 2 and a wave 3. In fact, it's like more like a 3-wave structure. But of course, by the time you look at the smaller time frame, you might be able to probably complete it. But it's more like 1, 2, 3, 4, 5, or something like that. So now, but it's a corrective wave anyway. So this is A and B and C, we are done. So we are in between now this and this wave. We're no more interested in what is happening here. So we are looking at this wave. And this is also a 5-wave structure here. 1, 2, 3, 4, 5, because you can say this is 1, 2, and this is a wave 3 here, and a 4 and a 5 here. So after that wave, we have A, we have B, and we're now seeing C. That's how to look at it. So if I want to come again, after this move, we had A, we had B, and we had what? A C. So you can see this one as X. So after that X, we have another A, we have another B, and we are seeing of C. Where is this one going to get to? Now, again, in trying to look at this one, they have a knack for doing something. So this thing, don't forget that you have to push this one. You have to mind this also. This little movement here, though it's small, it's small. That's called JPY that we are doing. The wicked soul shall not find rest. So there is a proper price action on the monthly time frame from down move anyway. So which we'll see later. So you don't concern yourself with, like I told you, this one is not engaged in any fib move. So this is where you have to calculate your fib move, A, B, and C. That's where you do your fib. So we have A, we have B, and we have a C. So C is what we are doing. And the wicked soul, they change it. It's all well and good. It's all well and good. So where are they going to get to? So we need to understand what we have in the middle here first. What are we seeing in the middle? This is more like an 100% from the origin of A, and A is three-wave structure, and the one also in the middle also is a three-wave structure. So it's going to be a flat. So you can see 1, 2, and 3 to end there, and all these ones are three-wave structures. 1, 2, 3, 1, 2, 3, 1, 2, 3, and before we have this one. And the last one definitely is going to be a five-wave structure. This is 1, 2, and 3, and 4. This is the fifth wave that is going up. That is the way it is now. So before, we thought this one was wave 3 and wave 4 and a truncated 5. See, they fooled us and they throw this one up. So we are going to trust higher. So now we can now see that this is the end of wave 3 and this is 5 going up. Now, from here to here, it's 1. So we can still look at this as an 100, So we can look at this as an 100. So if it's an 100 retracement, definitely B, being an 100, this is not a zigzag, and it's not a flat. So it can be two things. It can be a running flat, and it can be an extended flat. So if we need an extension, we're looking at the extension between 61.8, 100, and 123. So that is what we should be expecting for C. That is what we should be expecting for C. So with that said, we're going to take into cognizance this little move. Let's bring out our extensions tools. All of them are doing flats. They have done it in the middle, and they now use this one to fool their lives. They will soon burn themselves out. And so we have to come back to here. In fact, we don't even need to do this one. Let's just use a retracement tool straight from A to B, because it's more like an 100. So we just bring it down. That's all we do. We bring it down to accommodate it. So a 61 There's it. This is 61. This is the price actually had broken an 100, which is, this is an 100. This price had broken an 100. This price had broken an 100. This is 127. So this is 1. So we don't expect price to move more than that. So now the next thing we are going to do for this one, even if I want to use my extension tools the way I wanted to use it the other time, and say from here to here and to origin of A, to only change it a bit. So push 61, push my 61 to this level, push my 100 a bit above it. Okay. Push my 100 a bit above it here. And let me change this back. Okay. And increase my 123, or let's say 127 to this level, and my 116, 61.8, and I'll be more interested in reactions around 141, which is around between here and here. I'll be much interested in that region. So this is where I will expect reaction between those two levels, this and this level. That's where I will expect reactions. But then this kind of a trade is better for us to wait and see reaction before we say we want to engage it. Now, so we expect that C will be around here, and I don't expect C to go and break this level. I don't. So the worst case scenario is to get around this area and stall. So now, looking at the internal structure of CAD yen, now that we know that we are doing a C wave, we are doing a C wave to the upside. Those are the things that has changed on CAD yen. They broke 100. We didn't think that they were going to break this 100. They broke it. And of course, if we had seen this, probably would have thought it was possible, but they broke it. That was what they did. So we need to now count the internal structure of this wave very well. So this will be 1, and this will be like where 2 is. So let's look at it. Let's look at it. So that is 1 there, and this is 2 here. So we have to look at the fib retracement. What do we have? Between here and here, what do we have? We have about 61.8, which is correct for 2. So this is 1 and 2. Even if you pull it down to this level, it will still be correct. It will only make it about 50. So anyhow, that one is straight away with 1 and 2, with 1 ended here, 2 and 3. So that one is more correct for this wave. So that would bail us out. This is 1 for Cardian. This is 1. So this is 2 for Cardian. This is 2 for Cardian. So which means now this is 3 for Cardian. So this is 3 for Cardian. This is 3 for Cardian. And this is 4 for Cardian. This is 4 for Cardian. Three. And 4, unlike the other ones. This is 4 for Cardian. So, and so we are on the last wave. We're on the last wave for Cardian. So if you're on the last wave for Cardian, and we said in between here and here is where I expect reactions. So this thing is going to burn off. That is what we should expect. Some corrections and it's going to burn off. That's what we should expect. Now, and it might be a sharp 4. Look at this place. After this is just a sharp 4. So it can be a sharp 4. It can be anything. Can you see what happened here is a sharp 4. They can just give a sharp 4. I expect all yen pairs to begin to go down after 29th of this month. I expect every yen pair, all the yen pairs to begin to crash. After anything after 29th of this month, that's when they usually make this move. So they will just be falling sharply and they're going to fall like this. Their falling is going to be like this. That's the way they do. Expect them to fall like this. Can you see this sharp movement? That's the way they fall. This movement, that is the way they're going to fall from 29th. So we should be ready to catch it because it's going to be very fast. That's what they do. That is what they do. So they might not really give you time. And that was what ensnared us. That was what ensnared us. And all of a sudden, they just push this one forward and say, okay, this is just our 5, our 3 now. So now, if we are going to expect, this is where we expect. And if you go by fifth retracement of 4 to 5, 3, 4 to 5. So if you say this is 3 now, on the higher time frame, so if you say this is 3 on the higher time frame, and this is 4, then you can say our 5 is still going to be around this area where so once it goes up, you know what to do. It's still going to be around this area. We said that this is our 61. No, this is our 61.8. And this is our 61.8. So which price? Let me take that out. So that one is out. This is 100 that gone beyond this. This is 127. It has gone beyond it on the area of this entire ABC correction. This is 127. So this is where we expect price to be. So I think what we now hold is not per se the 3, 4, 168 of 3 to 4 to give us 5 is not going to hold in this case. I think is the correction of the higher time frame that will hold price most likely. So another thing that I can do again, because if 1618 does not really work, the other thing you must know is that the last wave cannot be higher than the cannot be longer. The fifth wave is not longer than the third wave. So if the third wave now start from here, and this is third wave now. So that's, we are trying to do so many things to see that we don't expect the last wave to be longer than what it is. So we are going to come on the fourth. So if we do that, so there is no basis for this price to extend. Otherwise, then it will be higher than the third wave. If this is the third wave, and this looks like true Elliott really to me, from here to here is 3. So we are going to see reaction around here, around this place. We are going to see reaction. So even looking at the correction of the higher time frame, so we are going to see, and with this, we should see reaction around this area. The trade does not have any business getting to this area, so we should see reaction around this area. So another thing I can do in terms of fib retracement is 1 to 3 and to 4. So that also has failed, because this is where it's supposed to give me, because it's corrective wave. So they try to do all sort of rubbish around here. So this is an extension that we are seeing. So, and it shouldn't go beyond here in terms of 3 being the longer, and in terms of ABC correction that we see that it shouldn't go beyond here. So we have already marked up, a bit above here. So we should be seeing reactions around here on CAD yen. Now, so on the lower time frame, to fine tune, let's go to the weekly to fine tune this move on the lower time frame. So now it still works like that. Now the 1 and 2 and the correction of 2 here, to these, and okay, this move, and they had their own corrections, ABC corrections. So you can count the ABC correction, but it didn't start from here. So 2, 1, and so if you are not looking at the higher time frame, you would have thought that this is what 3, and this is 4 of 3, and it will appear so like that. You say this is 3, and this is 4 of 3, and this is 5. So your 3 would have ended here, and you have every right to believe that 3 has ended there. If it is 2 and 3 of 3, 4 of 3, and 5 of 3, and it should have ended there. But this is still part of the fourth of the correction, the fourth wave correction. So to make this area your 3, that is what it is now. So this is 3, and we are seeing the 5th wave up, and so this is going to end soon. So that is what we can see. But I haven't said that we should be expecting reactions at those level. Now to catch, looking at the candle here, the way this one has to close in about 4 hours, but it still suggests that the price is going to burn off, and it's not coming down for now. It's going to burn off. So even with this daily candle, you can see the way the daily candle is, they still want to go higher. The way it's going to close, it's going to push higher. It has broken 100, so it's going to go a bit higher. That's what we can see here. Now to catch the price, just like we saw with yen, this is what we can do to catch the price. Anytime it's going to fall, to catch that price, we have to look at price action from time to time before you say you're going to that's a sharp rise. also. So that's the daily, the 4 hourly. So we can fine tune. I need to see 4 hour candle close below this. I will have to start with the first 1 hour candle. So the reaction here also, like we saw with the USD JPY, you see, this is A and this is B, and C is coming down before they go higher. And after that, probably they might just change the trend. So that is what it looks like on. Now let's look at pound yen quickly. Pound yen. Let's switch to the monthly time frame. That is what we need to do to see what is playing out here also. Okay. So I believe that this is the end of it. Now, we can see, we have to see, probably there had been a move behind this, and this move, and these are corrective wave. It's like wave, this is 5 wave structure, 1, 2, 3, 4, 5 wave structure, and this is an ending diagonal. Then we have this also like a 3 wave structure also, 1, 2, 3, and the last of the third wave is like a 5 wave structure. So this is a 3 wave, and the middle one is a 3 wave, and this is like this one is now the 5th wave. Then you now add this also in between. So this is your C, this is your B, and this is your A. So something that happened here to have a correction of A, B, and C, and a 4. So that's how to quickly spot what you are doing. You have to quickly spot it. You have to quickly spot it. If you cannot spot it, you have to quickly spot it and see the direction of the trade. So that happened, and price did that. So in between that, this is like a move. It's still part of this move to now end the price. So this is an example of the 5th wave that is now truncated in this kind of a correction. So you look at the correction. So you can also still see it as A after this move, a B, and a C after that move. And this is a new move down. So just like we did for the other one, so this move has ended. So we're going to now pay attention to the move here. So this is where we're going to pay our attention now. Here, we're going to pay attention here. So I try to mark it. I believe we are seeing it the way I'm trying to mark this thing as quickly as possible. So that is the new move. So this is from here to here. Then this is A, this is B, and this is C. Quickly. So you see that sharp fall. So it's a correction. The direction of the market is towards the down. So which we first, and the way, so we are trying as much as possible to analyze this thing. So to be able to catch this wave, because EMPs have this knack for this kind of a thing. They will just fall sharply, very fast, bam. They will now do correction for eternity. Another sharp move, bam. They will now do correction for eternity that they are doing. So we are expecting another sharp move down, which will break this place and break this place,